What is going on, everyone? Welcome back to another episode of the Easy Button Real Estate Podcast with myself and Mr. Tucker Merrihew. Today, we got some fun topics to talk about, you guys, amongst the kind of normal back and forth that we like to have. So, we're going to get into kind of the market across the country, how it's kind of hyper localized right now, and some other topics that I think that are impacting everyone currently. But before we do, Tucker, what is going on in the last week since we were on the mic for you and your world?
It's been a busy week. Obviously, we had our quarter end meeting for Easy Button this week, and on the same day, we were actually pouring a massive amount of concrete on our job site for our slab and our footing. So basically, the foundation, we'll call it, right, of the house that we're building here, the high end one. And so we made progress with that. We got all the form stripped off. And we're going to start stacking block is what they call it when you basically, instead of framing walls, you stack block. So we're not framing them out of wood. Part of the upstairs is, but the whole main floor, with the exception of the interior framing, is all block walls for the exterior. So we start stacking block on Monday and going vertical, and pretty excited about it. I mean, the market is it's okay. But the house itself, I'm excited about. I still think it will overperform for the market conditions. But it's nice to just see progress and see things get moving. So it's been a good week on that front for me.
What do you think your like total build time by the end of it will end up being? What time would-
October or end of October, I think we'll be done. So we're probably about, 5.5, 6 months away from completion.
from when you bought it, what do you think that total time is from like? 'Cause I know I guess also this is one you kind of sat on for a while to try to figure out what the market was going to do, but
Yeah, I mean, permitting is it's such a wild card. So the time that it took to get through permitting on this one will probably be like 2x what it takes any other one,
Mhm.
because it was our first one in the city of Naples. But it'll be fairly lengthy. I mean, I bought it, over a year ago now, so we've been sitting on the dirt for a while. But that's not abnormal for builders to buy dirt and clear it and sit on it while they're getting permits done and whatnot. But fortunately, the margins here as you get into kind of the higher end, are fairly significant, and so that's why a lot of guys do it.
Yeah, I actually saw right now that DR Horton and Lennar are a lot of their inventory that they've built recently. They're just like sitting on and not even releasing it and selling it yet because there's some that's it's more worth it to just hold on to it for a little bit than to sell them
Yeah,
all.
they're also building with other people's money. So publicly traded companies, they like to play a stock price game too. So they'll pay for, huge rate buy downs or do things like that. Sometimes, they'll even slash price significantly just to get sales so that they can kind of fill the bucket of like, units sold or gross sales,
Yeah.
to kind of help put a floor under the stock price. Because if they just sit there and sales go in the shit tank and they don't lower, the price in order to try and get some absorption and get some sales going, sometimes that's almost worse than selling stuff at like a, virtual break even or super thin profit margin stock price wise. So a lot of those decision makings are done not necessarily because it's the best thing for the real estate business itself, but more so for the shareholders and, which are a lot of the executives in those companies as well.
Yeah, they're kind of playing the boardroom game as much as they're playing the actual like build and sell.
Yeah,
Uh,
it's like two different games of real estate. You've got your smaller operators, and then you've got your, infinite amounts of money operators, which are essentially publicly traded, home builders. It's two entirely different games.
like it's like what Tesla does when they're coming up to a quarterly earnings report. Like our cars are essentially free. Go buy one, 0% interest, 0% down, uh, $300 a month, and they sell a bunch. Then all of a sudden it's all of a sudden they're expensive again. So I think everyone plays that game. Yeah, I guess on the other side of the coin, on my end, we're paying a staff up a little bit. We brought in a second sales guy this week. Staffing that back up, which is great. We actually created kind of an incentive program a little bit in our call center that's helping for that campaign. and also for, call center costs, or if an agent produces a lead for that campaign, they get like a $2,500 bonus, which for them is like half their yearly salary, or, a third of their yearly salary. So, doing some creative stuff there, and yeah, building that back up. And then I think on the Easy Button side, we're having we just had one of our biggest months ever, in March, of new clients signed. We signed 30 new clients now, in March alone, which is, or just short of it, which is really awesome to see. And, like 25 or 30, and on our new package, which is, people getting low cost callers at, $4.50 an hour that can really help them grow and scale, amongst other things that we do for people. So it's been a good month, good into the quarter, and good kind of kickoff to quarter two. And, um, I think, to be honest, like, we've gotten our ass kicked big time there for a while. And we've kind of had to we restructured that business a lot. Just, I think we've been in it just as long or longer as anyone, and we kind of go through the, cycles to get to where we are, and, continue to build on the fly. But I think the iteration we made of putting it in front of people at kind of a Costco model is, while difficult, has been necessary. And you guys out there listening that are just constantly changing your business, so is everyone. Even if you see someone that has a podcast or online, making content, we make a lot of content. We have a lot of success. I mean, it's still, the past couple months have been bloody in the sense of, trying to rally the troops and push through some hard initiatives, and make some changes on the fly. So, uh, there's no one out there, even if they, no matter what kind of mirage they put online, that's a lot of days they're in the office getting their ass kicked with random stuff. And I think that's important, for you guys to know that are listening, because it can feel like you're the only one that's losing some days, but most people are most of the time. Even if they have the big wins, they sell a big profit, they get a big check. Still a lot. I mean, how much shit have you been through on the current build you're doing, Tucker? Right? Like, and at the end of the day, you're gonna get a nice check, but it's still, at most days are like, I gotta deal with something. Here's the next thing, right?
Oh, yeah.
Uh,
Yeah, I mean, that's just the way it is, and honestly, like, kinda goes back to our previous discussion, but, like, running a small to medium-sized business is almost more difficult than running a big business a lot of times because again, you're not using other people's money, right? Like, your runway is limited to what you can create, not some form of venture capital or money because you're a publicly traded company that's just infinite, essentially. So, you're really, trying to stretch a dollar as far as you possibly can, especially in the lean times, and trying to rejigger, what's the best version of the business in order to have the customer succeed as much as possible, and also have the business succeed. And I think we've now found that model, finally, but it's taken 10,000 iterations, but that's normal, especially in a business that's as difficult as, the marketing business for real estate. It's just, it's ever changing, and there's never actual constants. And so it's been difficult to kind of figure out what the best way to run that is. But I'm confident that we've landed on it now. I think it's a great, it's great for the customers, and it's stability for on our side, which will ultimately let us grow and do even more for the customer in terms of education and other tools, as time goes on.
Absolutely. I think it's an important message for you guys, like, that are out there in the trenches building your business, doing deals, to look at, go revisit. A lot of this stuff came from really looking at where, every dollar that goes out in the company, and why it's leaving and what we're spending it on. And, to do that for yourself, because, uh, I have a lot of the clients I work with one-on-one do that, and, they come back like, man, I'm spending 7, 5, 6, 7, 10 grand a month on stuff that has no return, or that's a waste. And, real estate business especially, like, you're not building that to sell it. So, you better make it profitable. You better make it simple. You better make it lean. Otherwise, what's the brain damage for at a certain point? But I want to, pivot a little bit to something that I think is impacting a lot of people, but also really impactful here in, California, and I know it is in Florida as well, but insurance companies, and how they're messing with buying and selling of homes. Here it's gnarly. For example, my in-laws' house was in a fire damage. My house here is in a fire damage zone, is in a fire hazard zone, and most insurance companies are pulling out, and you can get some state programs, but like, a lot of people, especially higher price point homes, um, high risk fire areas, they can't even insure their whole home. Someone can't even insure half their home, and it's only getting worse. So I'd love to hear your thoughts on, it's not impacting everyone that listens to this show, but there's more and more states where, like, you're seeing insurance companies play a different game. I'm curious on where you think that's going to continue to go. Obviously, Florida is more for hurricanes than fires, California is mostly fires, but it's been interesting to because I've gotten my hands more and more in the local market here in San Diego, seeing how much that's impacting, the purchasing and selling of real estate.
Yeah, it's huge. I mean, remember the first, within the first year that I'd moved here, Hurricane Ian came through and
Yeah,
that wiped out, a lot. And then the next couple of years we had hurricanes also. So, um, it it affected the insurance market terribly, starting with Ian, and it became more and more difficult to get insurance and more expensive. And so, like now, I'm very weary to do any sort of a speculative project on water because your cost of insurance is crazy, and it's not just the finished product insurance, which is insanely difficult to get. Sort of like being in a fire area in California now because you're fresh off of the fires in Malibu and L.A. area. Um, but also for like the builder's risk policy. So like when you actually buy a piece of property to build a house or you buy a house to renovate, getting those builder's risk type policies in place are very difficult also and extremely expensive. And so it's had a major impact on our market here. For like the finished like home that can be bought as a vacation rental or a rental property, the rates on those, insurance policies they've probably tripled since I first got here for the first policies that I put in place, and so for some of those houses, I've looked at it and been like, "Okay, I'm paying, like, over, let's call it 3 or 4 houses, I'm paying X amount more per year for this hurricane coverage," which is insane, right? You get your normal liability and fire damage, normal homeowners coverage stuff, and it's like, 2 grand-ish a year, like it should be, and then you add the hurricane stuff on there, and it's like it's crazy depending on where you're at, hurricane and flooding. Although flooding, you even have to get additional insurance if you want it. So I actually pulled the hurricane insurance off of a few of the houses that, I own free and clear. If I have a mortgage, I don't get that choice, I have to pay it, because I was like, "Well, look, for the amount that I pay," like, let's say I gotta replace a roof, right? And since I'm a general contractor here, the cost for me to replace one of these roofs is like essentially it's less than paying the deductible and the additional premium on a couple of these policies over the course of 1 year. So it's like, well, screw it. I'll take the risk, right? Of just replacing it myself because it makes it very cost ineffective to run rentals at a positive, right?
mhm,
Or at enough of a positive that it makes it worth it. And you're really just shoveling the majority of your profits into these, extremely high insurance premiums, which you get nothing back for most of the time unless shit happens. And then you still have a, deductible that you got to meet. And they're fairly high with hurricane also. So, yeah, it's affected the market a lot. I've seen a lot of people selling their vacation rentals because it's just, and especially those people that like hire an intermediary, right? Like, or like property management company to run the vacation rentals for them. They take their percentage. Then you still have all your costs and everything else. And yes, some of those companies are a little better at getting bookings than others, but it still takes a big chunk of the pie. And then you pay a lot more out in, insurance than you used to as well. And I've seen a lot of people kind of bail out of the vacation rental game because of that. And I know it's impacted just buying normal rentals here in Florida, and then also, homeowners. Like they think twice about like, do I want to live here in this exact spot because my homeowner's insurance premium for the year is going to be a crazy number, right? So it's a big impact. I think it'll normalize a little bit more over time, but we've been dealing with that for going on three years now, really.
yeah, it's getting worse and worse here. After the fire up in LA, it really gotten crazy in the past year. The fire that tore through, a couple large communities up there last year and was one of the most devastating ever in LA. Like all of SoCal since then is like insurance companies do not want to be a part of it. And you can end up paying, you know, 25% of your mortgage to, to a policy that doesn't even cover your whole house. And California has some state programs for that too, but it's still that's usually not anywhere near the
What,
coverage.
yeah, so that brings up the question of what is, again, our country is spending a shit ton of money on things that don't benefit us as the American public, or it's a stretch to say that it does at this point in time, but, like, these are a lot of problems that based on the amount of money our country is spending right now, like, they're solvable problems. They can be, they can contribute on a federal level to try and stabilize these prices for, the typical American, unfortunately, that hasn't happened either. So there's, it's frustrating for me having been in this game for a long time, seeing this now, and it's like, what are we doing? And there's just most problems can be solved by money, but we never have money. But apparently we do when it's those in power have certain things that they want to get done. This just isn't one of them.
Well, I don't know if you saw it too, but Artemis, like the moon mission they're doing right now, they're planning on doing that to have launches once a month after this one's successful, and every launch is like 15 to $20 billion. And which I understand part of American culture, like, we wanna be first on everything. That's a big part of, the respect and kinda notoriety our country has, is we're always kind of cutting edge on things. But also I look at things even just as basic as, like, housing and how much money could go to making things more simple. Like, you wanna solve the housing crisis, make permitting easy, right? Make permitting an online, use AI, because the government has contracts with Anthropic and OpenAI for their stuff. Like, why not have a contract at the permitting level? You can easily build an AI model that can accelerate permitting, right? What does that do for ADUs and for housing? What is if you take, 15, 20 billion from every launch, I'm not saying we don't do it, and you put it into helping people insure their homes, how does that, spike people buying and selling properties again? So there's just little things like that that I do agree every time I see us doubling down on things that, don't seem to have an end in sight, and it's frustrating to see how much people are struggling in our country right now. I mean, I spent $140 in, California filling up our tank of gas, 2 days ago, which is, fine for me, but for most people aren't doing that. Like, you do that once a week and you're spending $600 a month on gas, like, it's over $7 a gallon in a lot of
Yeah,
places now,
that's
which is
crazy.
like,
I was 5.89 a gallon for diesel yesterday when I filled up the truck, and it was 4.19, 4.09, 4.19 right before, this whole, we'll call it a conflict, can't call it a war. This conflict kicked
military
off.
operation military operation.
Yeah, yeah, it's the closest thing that I think we've ever seen to World War III, but we can't call it a war. It's a conflict. It's just and
I s
you know what, I mean, I ragged on quite a bit, but I've been I've voted in favor of, Republican president the last 3 times, so it's not like I'm a hater of,
Yeah.
I don't have Trump derangement syndrome. I'm just, like, a realist American at this point, and, I really am concerned with the direction our country is going and how we spend money or how we don't spend money, but then how we do spend money. It's kind of like we're like a drunken sailor with how we spend money. It's crazy. It's like, okay, I think you need a financial advisor to give you or somebody to like ration what you can spend, right? Which normally we have those checks and balances in our government, or at least in theory. But my God, with all the problems that we need to solve right now in our country, we're not really solving anything for the American people. It's like it's almost kind of like we got put on hold, right? Like all of our problems and issues that were supposed to be solved have just kind of been put on hold for something that's supposed to benefit us. And I would say the verdict is definitely out on that still.
Yeah, I think I voted the same way, but I think our government kinda just, at the end of the day, stumbles one foot over the other, and it's a big clunky machine that just doesn't work together, and all the other parts don't know what other parts are doing. All of a sudden, you're like, "Whoa, now we got troops about to hit the ground," and, again, if it all plays out and ends quickly, and it'll be amazing, well, pat on the back, it all went well, but, historically, we tend to get dragged into these elongated conflicts, and on it I'm not a conspiracy theorist, and I'm not I very rarely lean that way, but I'm like, you look at our country, like, we've been in a war for, like, 86% of the time that we've been a country, and I'm like, honestly, a lot of our economy is built around, like, defense contracts and the war machine. That's a lot of what it is, so I'm like, because I read the Iranian president's letter. I don't really buy that. Like, I think it's all propaganda. I think they're a terrible regime, how they treat people. Um, but I'm still like, is there a part of this that's just like poking people until you find a conflict? Because ultimately, when you look at the fundamentals of our country, we do the best right after a big co economically, nothing stimulates our economy more, than war, and I look at that and I'm like, "Well, if you've been at war 86% of the time, eventually you have to go like, okay, the problem might be us." And some to some degree, I do think that, like, letting Iran have no nuclear weapons program is a bad idea. I understand the deterrence on that front, but at the same time, it's like, eventually, I think there has to be a focus on the average American person who can't even think about a war because they don't know how they're gonna pay their bills next month.
Yeah, and they obviously the gas thing we're talking about, that's kinda like the most obvious form of inflation, although, they claim it's temporary, whatever, but virtually every American knows what a gallon of gas costs because they fill up gas in their own car, they at least pay for it. Not everybody goes grocery shopping, I don't know what a gallon of milk costs or a carton of eggs, but everybody goes to the gas station, right? And so, I think that, at this point, the vast majority of Americans are like, why am I paying for this? And, there's other countries too. So that's the flip side of this. The other countries, that are very much not happy with this either. So it's kind of changes the dynamic of world geopolitics as well. This is not just in a vacuum, right? And so that's been my bigger concern with this is like, what happens if China and Russia decide they've seen enough and they back Iran and they're like, put troops on the ground and you're fucked, right? And they're not going to be talking to us. They're going to be talking to, the other people that we're fighting with that are in the Middle East, right? So more than likely. So, it's a real possibility if we keep pushing and pushing and poking the bear, basically, right? Because that's when you upset the world, sometimes the world, tells you that you're in the wrong. And so we'll see how it turns out. After last night's speech, I'm less optimistic that it's going to turn out well.
World War
That's for sure. I was,
Or frame like, World War II was this amount of years, and World War I is this amount of years, and we're just getting started. We're only 30 days in. I'm like, well, that's more framing it as like, you know, hold your seatbelt, we're just getting going, rather than like, oh, this is
yeah,
gonna be over in a few days.
yeah, which is why oil spiked, over 110 bucks a barrel this morning, and it is what it is. So we're on a bumpy ride. I am hopeful that by the time we get towards the end of this year, we actually get back on track with a more, improving real estate market, but I feel like this has kind of pressed pause on that for a little bit, which is unfortunate because again, that affects us directly.
Yeah, you guys out there listening, it is. I mean, again, I think I'm still big on the like, there's always gonna be deals happening, and this isn't, we're not talking '08, but, I think we were on a downtrend of, like, softening. There's rates coming down. The Fed was getting more aggressive in that sense, and everything kind of I think everything kind of freezes when this happens. You get these big
Yeah,
swings.
people tighten up, right? Like the consumer tightens up. And so at the end of the day, like the way that we run real estate, like we buy and sell real estate on a speculative level, right? We buy it for cheap, we sell it for more. Every time you sell it for more, whether you're wholesaling it to somebody who's then going to sell it for even more after they fix and flip it, or you sell it to an end user, um, you know, both of those types of buyers clamp down a little bit more, right? They get a little bit more weary and nervous. And ultimately, there's less of them in the marketplace. So it's not like it can't be done, but it forces you to be an even better operator that buys at even a bigger discount, which then who does that really help, right? At the end of the day, like then the person you're buying it from, they're making less too. So it's really like the shit rolls downhill and it affects everybody on all levels.
And I think as we kind of have the party message today, as we rambled on the macro stuff for a while, which I think is important, is on the micro level, you guys, in your markets, like, while I do think there's deals happening everywhere nonstop and you shouldn't let that limit you, at the same time, it's good to know what's happening locally, in the sense of, if you're in the short term rental world, what's happening there, right? There's a lot of places right now where, um, you're getting hammered. You look at insurance, what's happening with insurance premiums, what's happening with, what are proposals are coming out. Like in Washington, they just passed the wealth tax. Right, it's a 10% tax, you make over $1,000,000 a year, and now they're gonna be voting on a second one, which is a new state income tax. It's really important to pay attention to these things because they can shift the market pretty quickly, and a lot of times you can take advantage of that, right? Like, if you know that's coming, a lot of times, you can take advantage of that, and by advantage, I mean, you know, get out ahead of it. And like a lot of developers that make a lot of money, they kind of just they study that stuff. They just kind of see where things are heading. Like here in San Diego, a lot of developers are starting to build up in Oceanside because it's the last little pocket of town that's going to turn over um, before the military base. So it's really important to pay attention to this stuff, even if you don't need to become an armchair economist and like people Tucker and I know post Facebook rants on it every single day. Um,
Yeah, you don't have to
there's
be that deep, but you just gotta read the economic tea leaves when it pertains to real estate, right? And it's pretty simple, like, real estate's a pretty simple business. It's not like it takes PhD level,
yeah,
understanding of economics to do it. It's just, but like you said, if state passes new major income tax laws, then obviously there's gonna be less people that are moving to your state, or wanna stay in your state that are high income earners, especially if it's a rainy state. Sunny states can get away with it a little longer. Rainy states, not so much. Or if there's like a big bond measure for property taxes that they try and push through for to continue funding, homeless outreach help programs, and it's going to be like a huge jump in property taxes. Well, that is going to be an issue down the line, especially in areas where it's, mid to higher price stuff that people finance at a high level, right? So they're paying high interest rates, they're paying high property taxes. There's going to be less buyers. Those people are going to pull back more than your markets generally that, are a little less pricey, that have a little bit lower property taxes. So it's just, it's pretty obvious stuff, but it's just things that you kind of have to pay attention to. And when things are good, nobody cares. Everybody's just like, whatever, I'll buy whatever, it doesn't matter. But it's when, things get a little more challenging that people actually start to do the back of napkin math on things and be like, okay, this makes sense. This doesn't make sense. And we're just in kind of one of those chapters right now, but it's good to understand it even when we're in kind of the better chapters as well. Cause that even in the good times, that doesn't last forever, right? It's real estate is like this roller coaster. Some markets go down and up faster than others, but it always cycles. And I've been through a lot of them now.
it's a good place to leave for today, guys. I think that's a good message. Outro. As always, if you guys listen to the show, we appreciate it. There's a growing number of you guys that do. We'll continue to get these weekly episodes out. And we also have a lot of you guys enjoyed our last round of client case studies that we rolled through, which will make this 2 episodes per week. Beyond that, we only grow through word of mouth. So continue to spread the word is very, very helpful. And we're super pumped to continue to get the chance to work with more of you, to get to know more of you. And below the podcast, you can always jump in our free community, which is growing tremendously and is very active. We have weekly calls in there, constant discussion. So it's not just one of those communities where you get in there and you get sold stuff. It's not what we're about. But beyond that, whether you watch this on Apple Podcasts, Spotify, whatever, maybe you leave us a review, a like, a share. And until next time, you're only one deal away.